Hey guys, it's Gaetano. Today we're going to be talking about why you should consider buying a 2 to 4 unit home before buying a single family to live in. Now I know what a lot of you are thinking. A 2 to 4 unit home is a lot more work and responsibility. But hear me out. First off, the down payment for a 2 to 4 unit property is only 3.5%. It's right in the range of the down payment for a single family home. So if you're just starting out and you don't have a ton of cash saved up, a 2 to 4 unit is still affordable. But here's the real game changer. You can live in one of the units for free. Here's how you do that. Let's say you buy a 3 unit property, you live in one of the units, and you rent out the other 2 units. The rental income you receive from the other 2 units can cover your mortgage payment. Thus, you don't have to come out of pocket with any money each month. You're theoretically living there for free. Now, I know what you're thinking. You want to live in a single family home. That is totally fine and understandable. The thing is, if you start with a 2 to 4 unit property, let's say that 3 unit, you rent it out for a year, you live in 1 unit for a year. Once you move out, you're then going to be able to rent out the unit that you left and create cash flow, excess rental income above and beyond the mortgage payment. You can use that cash flow to help pay for the single family monthly mortgage payment that you're buying. You're going to be in a much better financial position when you're ready to make that move. So if you're considering buying your first home, don't overlook the 2 to 4 unit property. It's not the traditional route to go, but it's the best way to create cash flow and long-term wealth. Let's take a look at the numbers. Here's an example we're going to look at of buying a single family home for $400,000. Your down payment is going to be $12,000 and your loan amount is going to be $388,000. We're going to assume a rough interest rate of 6.25% with a conventional loan. This means your principal and interest payment is $2,389. Your taxes per month is $600 or $7,200 for the year. Homeowners insurance of $150 a month or $1,800 for the year, and PMI or private mortgage insurance of $120 a month. Now that PMI is based off a few things: credit score, how many borrowers on the loan, total income, the zip code of the property, whether it's a single family, multifamily, etc. So there's a few factors, but it's priced out there. PMI, if you have strong credit, is anywhere from $50 to $150 a month, I would roughly say. So your total payment is $3,259 for a single family home at $400,000. That means each month you have a monthly payment that you have to pay of $3,300 roughly. Let's compare this to a multifamily home. Let's say you buy a 3 unit property at $500,000. A bit more expensive, but that's okay. Your down payment is $17,500. Total loan amount of $482,500. Now, interest rates on FHA loans are typically lower than conventional loans. So the conventional loan had a rate of 6.25%. The FHA loan is roughly 5.75%. The principal and interest payment is $3,337. Taxes, a bit higher, we're going to assume, of $750 a month. That's $9,000 for the year. Homeowners insurance of $250 per month or $3,000 for the year. It's a bit more expensive because there's more units. And then PMI or mortgage insurance premium, private mortgage insurance of $342 per month or about $4,100 for the year. So as you can see, the FHA loan has higher PMI than a regular conventional loan. The way it's priced is standard across all FHA loans if you're putting 3.5% down and the loan amount's below $625,000. It's 85 basis points of the loan amount, which would be $4,100 for the year, and you divide it by 12 to get your monthly payment. So your total payment with this FHA loan for a 3 unit property purchased at $500,000 is $4,679. It's more expensive than the conventional loan. However, you're going to live in one of the units and rent out the other 2 units. Let's say you rent out the first floor and the second floor. The first floor for $1,800 a month and the second floor for $1,600 a month. Unit number 3 you're going to live in. That means each month you're going to be collecting $3,400 of income. So your net housing expense is not $4,679. You take that number, you subtract the $3,400 that you're going to receive in income, And now your net payment is only $1,279, $1,279. The difference versus the single family is $1,980 per month. That's over $24,000 a year. Over a 10-year period, that's $240,000. If you invest that $24,000 each year at roughly a 6% rate of return over a 10-year period, that's over $360,000. And that's from buying a multifamily property instead of a single family. So I hope this proves a point of why I think buying a multifamily property, specifically a 2 to 4 unit property, before buying a single family home is the best way to create long-term wealth and cash flow. If you have any questions, please drop me a note below. I'd be happy to help.